Welcome back to another Bar by Bar. Markets have been volatile as we trade into the April 2nd tariff announcement, what Trump is calling Liberation Day. He's expected to unveil a major escalation in tariffs on various imports. Over the last few weeks, we've seen tariff uncertainty ramp up, foreign and institutional capital pulling out of the US, large cap tech losing leadership, Trump saying he's not focused on the market and is willing to weather near-term weakness, talks of potential tax increases, and even some cracks in the AI narrative as Microsoft steps back from certain data center projects. So yeah, interesting environment to say the least, but as traders, volatility equals opportunity. And here's where I personally found edge and made money over the last 2 weeks. Let's jump into it. Our first trade is going to be QBTS on the 20th. This was a classic sell the news trade and one that I really liked. QBTS, which is a quantum computing name, was trading independently of the overall market into an event, which made it a great example of an in-play sector and stock. The broader market had little influence on price action, and with a bit of research and staying current on market events, this setup was easy to spot. A key part of the catalyst here was NVIDIA's GTC event. GTC is their big annual developer conference where they showcase advancements in AI, robotics, and now quantum computing. As part of the event, NVIDIA was hosting the first ever Quantum Day, scheduled to kick off at 1 p.m. on Thursday, the 20th. So naturally, anything in the quantum computing space, like QBTS, was getting attention and bid up into the event. It was clear to me that QBTS was setting up for a textbook sell the news move. The stock had been squeezing into that Quantum Day event, and traders were front running it like we see with known events that are getting attention time and time again. So in past bar by bar videos, we've gone over QBTS and we discussed how Jensen talked about how he thought quantum computing was about 30 years out from being helpful or really making money, which caused these stocks to absolutely tank. And then you could see we consolidated in this range in QBTS from about like $5 to $7. Then they reported earnings and they ran into that NVIDIA Quantum Day. So Wednesday, which was the day before the event, you can see that QBTS fails into this resistance area, and we'll zoom out and we'll take a look at that. So you can see stock reports earnings, and it has an up move into this Quantum Day event at NVIDIA's conference, and it's able to consolidate and hold up well into that event on Thursday. It even has a pullback here into 960 and holds before it bounces. But what ends up happening is we see a series of lower highs starting to form. And I think that on Wednesday, which was the day before the event, shorts started to see that, and they started to get some FOMO, thinking that these quantum stocks, specifically QBTS, because it was up the most out of the quantum basket, would sell off into the event. And I think that attracted shorts the prior day. In the morning on the day of the event, the stock starts to fade in the pre-market and retests that Wednesday prior day low before it bounces. And I think that also pulls in more shorts who have FOMO and think that the stock is just going to fail right into the event. And they start to front run. Off the open on the day of the trade, something really interesting happens that triggered me to take a short well before the event started at 1 p.m. Let's talk a little bit about that. Off the open, the stock pushes, consolidates, and breaks through a key level where I'm sure a ton of shorts started covering as they feared the stock was going to run into 1 o'clock. And I'm sure this also attracted a lot of longs as QBTS broke through that prior day's high. And you can see that I have that labeled YH, which was $11.16. In addition, if we zoom out a little bit, and we'll take a look at a 15-minute chart. If we just draw a trend line connecting the recent high to the lower highs, you could see that on multiple time frames, it looked as if we were breaking this downtrend that started to form against these lower highs. And I think that also attracted a lot of longs. And you could see the volume that comes in over that previous day's high. We have the highest volume of the morning up to that point, which creates a stuff. And I thought that this offered a really nice risk-reward trade to the short side after we break this uptrend from the open, from the low at 930. We have a blow off through the prior day's high on high volume. And in addition, we are up roughly 80% of an ATR from lows. That triggered me to take a short, risking just a few cents above that intraday high. As we traded down into 2-day VWAP and retested that opening price and tested going red on the day, I covered a piece of that position. We tried to hold and momentum came through. You could also see that level's 2-day VWAP. We break through 2-day VWAP on volume, and then we trade into the previous day's low, where I covered an additional piece of that position. And then we traded down into 960, which was the higher low on the daily chart from this pullback. So following that trade, I wasn't expecting too much into the event. I thought that QBTS could just take a break and consolidate after that move. And that's exactly what happened. So it held on to that higher low on the daily at 960, and it ultimately ended up reclaiming that previous day's low. And you can see how well that acted as support going into the event at 1 o'clock. I do want to just point out that there was a trade here that I did not take because I thought it was a little bit too close to the event, but there was a bit of a VWAP continuation here, and we could just point that out. Even though I did not take this trade, we could draw a trend line from the lows and follow it up, and we get a push through VWAP, a retest of that 2-day VWAP, and we have a little bit of a blow off there and the break of the trend. So I do think that there was a fair VWAP continuation set up there. I did not take it because I thought that the probability of just chop and games being played into that 1 o'clock event was more likely than not, so I opted not to take this. So following that test of VWAP and 2-day VWAP, which is where the prior day's intraday VWAP flattens out in the after hours, we get a retest of the intraday low and that 960 higher low on the daily chart. And what's interesting to me is right before the event starts, we wick through low of day and immediately reclaim into 1 o'clock, which is when the event started. And I thought that was really interesting. I thought that shorts were probably getting excited after they saw this move through VWAP, the break of trend from the lows, and it's sort of just stepping down into 1 o'clock and breaks through the lows. Shorts take that and they're squeezed out. And ultimately what ends up happening is we have a little bit of a blow off on volume. We have the highest volume we've seen since the first half hour of trade as that event starts, and we fail into yesterday's low, which you can see I have YL labeled here at $9.81. Following that move, we get a break of the short-term uptrend here, and that's where I took my short. On this failure of this trend after this blow off and failure into the prior day's low. We see volume come in through low of day. Perfect check in favor for the short. We're getting a breakdown through an intraday double bottom, intraday support, and that higher time frame, higher low that was put in. And we'll point that out. You can see that there on the 30-minute. Momentum comes in, price starts to slow down in front of $9, and I'm covering my position. So considering this, the second leg down, so we have the first leg down into the event at 1 o'clock. We have the blow off and the failure into previous day's low. We have this trend break and a second leg down. We test that $9. We push up into the 21 EMA on the 2-minute. It's not a perfect trend, but really strong trends tend to hold that 21 EMA and it tends to act as resistance. We could even draw a trend line from that wick high above VWAP, and it offers just a really nice sort of right side of the V style trade as it fails from the 21 EMA, fails from that downtrend line, and I initiate another short as that trend breaks, just risking a few cents above that recent high. As we trade into 850, which is another higher time frame support, I start to cover the position and I leave on 20% in case QBTS and the quantum sector really wants to break down into the close. And as we fail to make a new low and start to reclaim and hold back above the 9 and 21 EMA, the trend officially breaks at this point, and I cover the remainder of my position. Also, just worth mentioning is I'm listening to this event live, and I'm trying to gauge the language around the quantum event, and it didn't seem too positive to me. During the event, the overall vibe that I got from Jensen Huang's comments was that he wasn't that enthusiastic about quantum right now. It felt more like NVIDIA was sort of positioning itself to be a player in the long term. They talked about creating a new research center in Boston for quantum, and they didn't really hype up the current progress in quantum or the progress that some of these companies that were presenting were making in the quantum space short term. Trade 2. On Monday the 24th, the market was gapping up thanks to some optimism around tariffs. Both Bloomberg and the Wall Street Journal reported that the April 2nd announcement would be more targeted than feared. Targeted obviously sounds a lot better than broad sector tariffs, so the absence of major trade restrictions was being taken as a positive by the market. The stock I was most interested for a bounce was Tesla. I felt that sentiment was starting to shift from extreme negativity in the media to a few positive headlines. For example, on Thursday the 20th, after the market closed, Musk held an all-hands meeting for Tesla employees, which was live streamed on X. He talked about plans to produce 5,000 Optimus robots in 2025. He also encouraged employees to hold on to their shares even after the big drawdown. Then, over the weekend, Trump made a comment about going after anti-Doge protesters who were sabotaging Teslas. More attention and narrative momentum. So looking at the daily chart on Tesla, we're already showing relative strength. So it was interesting to me the day after Elon had that all hands on meeting, we saw the Qs trade well below the prior 2 days low. And if we look at Tesla, we could see on that Friday, Tesla was relatively strong in comparison to the overall market. It traded higher right off the open and didn't come close to breaching the prior 2-day low like the NASDAQ did. That gives me confirmation that this thesis that I have in my head about the news and the relative strength is true. On Monday, we got a gap up. So Monday the 24th, we got a gap up. And I made it clear to my team that I wanted the market to prove that it could hold gains first. I wasn't going to start leaning long unless we held up through the morning and started consolidating into the afternoon. I was completely okay missing the first move off the open. I needed the market to prove to me that it could hold this gap and it would not fade the gap up. For me, the trade setup was pretty simple. We had a really strong trend to the upside in the morning, and then we consolidated for hours into the afternoon. And Tesla continued to show relative strength in comparison to the NASDAQ. So we'll take a look at both. You can see Tesla consolidates at highs and it could barely pull back to VWAP. It's so strong that it can't even test VWAP. And as we head into power hour, which is from 3 p.m. on, we see the consolidation and price action start to compress and get tighter, signaling a potential breakout into the close. And if we look at the Qs, we can see the Qs was able to hold pretty well, but it just was not as strong as Tesla, right? It's retesting VWAP, it's coming down into VWAP and testing, while Tesla holds a very tight range well above VWAP. So that relative strength idea was being confirmed. Then something interesting happens. At 240, there's a headline, and President Trump says, I may give a lot of countries breaks on tariffs. And you can see that's this spike up right around 240 here. So we have this positive headline from President Trump that he might give countries breaks on tariffs, and we get a nice push off of VWAP on some volume off of that headline, which gives me a little bit more conviction that the market and Tesla could break out into the close. We'll zoom in a little bit and look at a 5-minute. So once I heard that headline, I started to position into Tesla. In addition, I just want to point out one more time here that on the higher time frame, essentially we have that relative strength that we talked about, but in addition, we now have a higher low and a higher high. So we're getting confirmation on this day of some break in trend here in Tesla. And I am thinking swing trade as I take this trade. Once we get that headline around 240, I start to build a position in Tesla. My risk is if this trend starts to break from this low, so really strong stocks, they tend to ride the 9 EMA. They'll pull back to the 21 EMA and hold before they have a move higher. And you can see how well that 21 EMA was holding as price tightened up into the close. We could draw that wedge there for a nice visual. So I'm risking against this higher low here, just below 270. So pulled back to the 21 EMA, pulled back to 270 and held. And I'm risking this trade just a few cents below this recent low here. So 270.02, just risking 269.98. My thought was that Tesla could get a squeeze above its 200 SMA, which was sitting at 285. As we started to break through highs on some volume, I added to my position. We consolidated at the close and then started to push above 280. As we were getting close to that 200 SMA, I wanted to just lock in some profits, so I sold 20% before the after hours closed to lock something in, with the plan to swing this overnight for a multi-day move. Early in the morning, pre-market open, 4 a.m., we got a little bit of a sell-off on low volume, but Tesla was able to hold well and reclaimed. Now, given how strong Tesla closed, it closed on highs, closed at the top 20% of its intraday range, which gave me the green light for the swing. I was a bit hesitant to hold the full position, given the fact that we did not get a gap up and we got some selling as pre-market opened. So I decided to lock in another piece of the position, leaving me with roughly 60% of the position left right before the market opened. Another factor that led to that decision was the fact that in the pre-market, we opened up just above the after hours highs and above the 200 SMA, and we failed from there. So I wanted to be safe, and I wanted to ensure that there would be no way that I could lose on this trade. So locked in roughly 40% of the position by this time, and true second day trades. If the stock is going to continue in the direction of the day one move, it should not hold below 2-day VWAP. That is a lesson that I've learned the hard way through taking many second day trades. And that second day trade, and for this trade, this swing trade, would be totally invalidated if we started to hold below 2-day VWAP. Favorite trade for second day trades is a pullback into 2-day VWAP and hold. This is where sentiment shifts on the second day. We look at 2-day VWAP as where the average buyer and seller are from the previous day. If we hold below that, bears are in control from Monday, and if we're holding below, the bulls still have control. On day 2 of the trade, we break through the pre-market low after this opening drive to the downside, and we hold 2-day VWAP. And then we come back down into 2-day VWAP and put in a higher low and higher high as we break this trend from the lows. And this is where I decided that if Tesla was going to continue to be strong, that this is the perfect place for it to bounce. And once we got that confirmation of the higher high, I added back that 40% that I took off. I've added it back, just risking a few cents below the low. And I was totally prepared to get stopped out, but I accepted the risk to where I was completely wrong on that idea, which was just a few cents below that low for the add. And if we broke below 270, I was going to sell the rest of my swing long for roughly break even. So locking in profits in the after hours and on the gap up caused this to be a free trade, even if we broke back through 270. We come close to putting in a new low. We end up holding 2-day VWAP again, and we push through VWAP where I sold half of that add, just generating cash flow based on a very clear second day play setup against 2-day VWAP. So scalp that out for some cash flow, and on the remainder of the position, wanted to see if we would be able to reclaim VWAP, and we reclaimed VWAP and pushed into 280, where I sold the last of that 2-day VWAP trade, leaving me again with 60% of my swing position. Into the close in the afternoon, you can see we held VWAP again, and we started pushing higher with the overall market. As we broke through highs on volume here, I decided to add that piece back to my position. This is a perfect second day trade. We get the pullback into 2-day VWAP, we start to reclaim VWAP, and we hold back above VWAP into the end of the day, and we start to break highs into power hour. Just like a perfect second day trade, perfect opportunity to add to the position to see if we get a momentum move into the close. And as we trend into the close, I sell my swing position as I now think that the risk to reward is to the downside as the Qs close at the 200 simple moving average, which is also the anchored VWAP from all-time highs. Trade 3. Next, we're going to look at a second day trade in the Qs. The day before the trade, the Qs failed right from the 200 SMA and anchored VWAP from all-time highs. Excellent confluence there with two huge indicators converging. As we previously discussed, Bloomberg and Wall Street Journal articles from the weekend suggested that the approaching tariff campaign would be more targeted than feared. But on Wednesday, which was the day before our trade we're about to review, and day one of the move was an auto tariff announcement that threw cold water on the narrative, making it clear that the White House is sticking to a maximalist approach when it comes to trade restrictions. The 25% auto tariff was close to a worst case as possible. The auto tariff would be applied to vehicles and parts, and that raised the risk of Trump targeting other major indices like chips, drugs, etc. In addition to the reciprocal tariffs coming on April 2nd, this setup is a second day trade if we got a pop into resistance levels from the prior day off the open. So for this second day trade in the Qs, we discussed the auto tariffs, and we also discussed the fact that the Qs were failing from the 200 SMA, which was also anchored VWAP from the highs. So there's that visual for you, so you could see that there. And given the fact that we failed from those key indicators and the fact that there was a negative catalyst for that downtrend, I was looking for a second day trade to position into a swing idea for a short on the overall market. Following day, which was Thursday, the 27th, you can see on that auto tariff news, we closed on lows and we got a slight gap down where in the morning we broke through that after hours low, we broke through those pre-market lows and we tested 480 before we started to bounce. For second day trades like this, where I'm looking for a continuation of the day one trend, I'm never really looking to chase lows. I would much rather short a pop into a prior day's resistance or a higher time frame resistance that fails. In this case, this trade actually took me 2 attempts to get right. So we'll go over the first trade, which ended up being a loss, and then we'll go over the second trade where I got it right. So you can see that I have a few levels labeled here. I have 2-day VWAP, which is at 486.50. I have the 20 SMA, which is around 485. I have the prior close at 484.38, which has some confluence with a higher time frame resistance and pre-market resistance. And that level was really interesting to me. So we have the prior close, 484.38. We have this pre-market resistance going into the open at 484. And if we look at the daily, the prior week, we could not get above that 484. We couldn't hold above that 484. So off the open, when we pushed into that 484 and started to fail, I actually took this short. As soon as we held the intraday VWAP and started to rebid, I knew that I could be wrong, but I wanted to give the trade a fair chance. Stopped out through the highs, and I knew that my next level was 2-day VWAP to take the short, and I was going to stick to my game plan. We trade into that 2-day VWAP and start to fail, and I just draw this simple trend line from the lows, and I'm getting short on this break versus a hold above 2-day VWAP. If we start to hold above 2-day VWAP and start to push higher, I will take the loss on this trade idea. So essentially, I'm not sizing just a few cents above the high. I'm really like accepting the risk to about $1 above that high if we trade into 488. I want to give this trade some room, and I think that if it starts to hold, if the Qs start to hold above 2-day VWAP, start to push higher, I have to give up on that idea. And I know that I'd be wrong around 488. So that's where I'm really sizing my trade to. From that point, we begin to fail and we hold the previous day's low yet again. Into the afternoon, we push into the 20 SMA on high volume and fail from there, and we end up closing the day on lows. Now, since this is a swing position, I'm not really staring at this on a 2-minute and over-analyzing every tick. I really want to give this trade the room that it needs. I don't want to overmanage it. So I'm really looking at the Qs on like a 5-minute and really like a 15 and a 30-minute. I'm just being patient and letting the trade work. And at the end of the day, we fail into the close and we close on lows and we close below the previous day's low and the bottom 20% of the intraday range, which gives me the green light to take this swing into the next day. So the following day, we're getting a gap down, which is a good check in favor. Off the open, first move is down. We try to take out highs and test that pre-market high and fail. And then we get an opening range break to the downside on high volume. And this was the University of Michigan at 10 a.m. came out. They released its consumer sentiment survey, which showed consumers were now anticipating a 5% rise in prices over the next year. This marked the highest level since November 2022. And this coincided with the opening range break through the lows on the highest volume bar of the day, which then caused this really clean trend to the downside. We get one push into the 9 EMA, and we continue the trend to the downside. And as we traded into this 472.50, if we zoom out, we'll just look at a daily here. You zoom out, you can see that was a little bit of an area of support. right before we bounced, where we held, and I chose to cover half of my position into that level. And as we traded down into 470, which is another higher time frame support, I covered an additional 30% of my swing position, leaving me with 20%. And that 470 level coincides with these lows from the first leg down in the overall market. At the end of the day, I decided to cover the additional 20% of my position. And I think that is one mistake that I made. I really was in from excellent prices right around 485. And there was no way that I could have lost on this trade. So I essentially did have a free swing over the weekend. So that is one mistake that I made on the swing trade, which costed me since we gapped down on Monday 31st. Trade 4. The last trade we'll review is a breaking news trade from the 27th. At 2:25 p.m. on Friday the 27th, Muddy Waters, which is a well-known short-selling firm, accused App of running a Wild West ad tech business. They claimed the company was using deceptive practices to inflate its performance. This was actually the third short seller report targeting App in just the past month, all raising similar red flags. On top of that, in late February, it came out that insiders had started selling shares. A company can only take so much negative press before it really starts to break down. And to me, that added conviction to take the trade. Another tip here is to turn on X notifications for these popular short seller firms so you know as soon as a new hit piece is released, which could lead to getting close to the best prices for your trade. In addition, sentiment for the overall market is extremely negative, which leads to catalysts like this having a better chance to follow through to the downside. And finally, we'll get into App, which was a breaking news trade on that same day. News came out of that Muddy Waters short report, which coincided with a break through the intraday low. And there was actually plenty of time to get into this trade. When I saw that news hit, App was trading at 304, which offered a really nice short just versus the on-change price from where that news came in. So took my short around 304, risking a few cents above the high of this candle. So 312.01, I put the stop, and then I trailed using prior 2-minute bar highs. We did get momentum through 300, round number, psychological level, where I covered half, and then I committed to the 2-minute bar trailing stop where I was stopped out here. That was the trade I took, but I do want to point out that there was another opportunity here into the close as we consolidated at new lows and then broke down the final 15 minutes or so into the day. Thanks for tuning in to another Bar by Bar.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that. allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.